I'm going to tell you something you probably don't expect to hear. And that is that the coronavirus crisis, which has been terrible for our society and for us as a whole, has actually given us a gift as investors, as a silver lining, that if you're a thoughtful long-term investor, can help you invest better over the long term. Hi, my name is Gary Mashuras. I'm the managing partner and chief investment officer of Silver Ring Value Partners. I also teach the value investing seminar at the FW Olin Graduate School of Business. So, what is this gift that I speak of that coronavirus gave us? Given that it's given us so many terrible things: death, disease, economic shock, loss of some of our liberties for periods of time, and that is, let's say you could go back in time, and let's say you're a long-term investor in businesses, and that's kind of what I am. I'm a bottom-up investor in companies. And let's say you were sitting there 6 months ago, and you were analyzing different businesses, different business models, and you were saying to yourself, "Gee, wouldn't it be nice if I could create this, scenario where I can stress test how good are these different business models and how resilient are they?" And this is what it would allow me to improve my understanding of businesses, because part of my understanding of what makes a quality business is how inelastic is the demand for that good or service, how likely is it to survive various shocks and maintain its profitability and so forth. So here you are, you're thinking about this hypothetical scenario, and now fast forward to today, essentially you just got that stress test, right? And we're in the process, the test isn't over by any means, but you have been able to observe which business models are truly resilient or anti-fragile, and which models maybe seemed to be such, but they were a lot less so than we thought. And so, one example that I'm thinking about, so I used to really like, and I still do, the dental distribution business, and it's a business model where, if you think about the dentist, everyone in developed markets goes to the dentist on a regular basis. You have some part of the demand that's prophylactic, like a dental cleaning, and some that's urgent, like you need, your tooth hurts, you have a, to the root canal, what have you, right? And some is, elective, like cosmetic, you want to have, implants or whatever, right? So, pretty steady demand. It's not very cyclical at all. And the dental distribution business is nice because it's not, technologically driven in the sense that you just keep distributing the supplies and equipment to the dentist, and whatever technology provides in terms of new improvements to that, you distribute that and you take a cut. So it's very nice business. It's in the US and many markets, it's a concentrated oligopoly. So think about it as a river you have to cross, and there's couple, 2-3 bridges, but at the most, and no way around the river, and the river needs to be crossed. So it seemed like a very good business. And one of the things that we found out in this, so I was listening to a conference call from one of the leading companies in the space, and I was kind of shocked. I shouldn't have been, but I was shocked. Like, their demand was down 80%. I was like, how could this be? This is such a resilient business. And, at least in the US, what happened was that dental services were considered to be non-essential, and they essentially got shut down during the coronavirus crisis. Now, obviously there's some portion of services that are essential where you need an emergency service if you have unbelievable pain, but this crisis made me realize how much of that demand essentially is, at least in the short term, even intermediate term, maybe optional. Now, if you don't clean your teeth for 10 years, you're probably going to end up with a lot more fillings that you need to do, or maybe other problems, but you could do that. If there's actually nothing in the short term is forcing you to go do a good chunk of the services that dentists are providing, right? So that just told me, wow, I had a certain mental model about this business, and it turned out it was actually less resilient than I thought. And conversely, there was another mental business that was distributing animal health products, and to veterinarians. So somewhat similar business. In fact, I thought of it as a less structurally attractive business for various reasons we won't get into here. But one of the interesting, kind of phenomena from this crisis is that vets were not shut down. That business was down in the very worst weeks of April, maybe 15% or so, and it's rapidly recovered and is now right around flat. While as other businesses are, seeing demand down 50% plus in a lot of cases, right? So here was, a lesson I learned, wow, that, and it makes sense because what that company distributes is life-saving medicines for animals, where a good percentage of the visitation to the vet is driven not by prophylactic or optional kind of wellness visits, but a lot of it is driven by must-do care, and they distribute the medicines for that care. Now, there is some prophylactic demand, of course, but it's a minority of the demand. So I learned about these two businesses in this kind of real world, I don't want to say experiment, but scenario, let's call it, where one business was less resilient than I thought, and another was more. And there are probably lessons like that that I'm going to look for and think about. And my hope is to come out on the other side, a better business analyst and have a better understanding of the businesses that I'm focused on. And I think you can do the same. You can think about, look at what's happening to companies that maybe you've been interested in and been following, and draw certain lessons about what that implies about the long-term attractiveness of their businesses longer term. I hope this has been helpful to you. If you like this video, please hit like and subscribe to my YouTube channel. Thank you.